Testing, testing, 1, 2, 3, testing, 1, 2, 3. Yeah? Is it good? Well, I don't have my headset plugged in, but it sounds good. Hey, Charles, have you been able to log in before, or did you just sign up? Somebody signed up yesterday, and their payment is coming through like a check, and some. Yeah. So you've been blocked? That's weird. That doesn't seem right. You know, and when you request your password, how about that? You can't sign into forex.today. What? I know WordPress was updated recently. That's weird. Oh my God. Constant battle. The best day ever. All right, guys, let's work on the redistribution of wealth. Yeah, I should have wrote that in my Harvard paper. Take money from the rich and give it to new people that want to be rich. And the poor people, who cares? In fact, I was talking to my 10-year-old daughter about it yesterday. In fact, my wife was talking about it. About this idea, one political party in the United States wants to take money from the rich and give it to the poor. My daughter's like, oh yeah, that's so nice. And then my wife says, yeah, well, they want to take it from daddy, take it from us, and give it to people that are poor. She's like, whoa, wait, what? You can't do that. Yeah. Oh, sorry, baby doll, you're going to have to give up your Tempur-Pedic. It's not fair for people that don't have Tempur-Pedic beds. So we're all going to live on cots. Oh, no. Oh, no, you didn't. Right? So, yeah, therein lies the problem. So anyways, guys, you need to take care of yourself. The government doesn't care about you. And that I don't know how I would feel if I was South African. I don't know if I'm speaking too forward, and I don't know the history of modern South African politics, but I think it boils down to when the white people were in charge, everyone was screwed over, in particular the black people. And then black people were in charge and everyone was screwed over, and particularly the black people. And it would make me very frustrated if I was a South African. I don't know if I got that right, and I know it's probably not politically correct, but that's what it seemed like to me. South Africa seems to be a beautiful place with awesome people, incredible food and culture, and it deserves better. That's all I know. I guess that's what I'm saying. It's one of the most beautiful places, and it's got fantastic wine, fantastic food, fantastic things to see and culture and interesting things to do. It needs better. Yeah, huge natural resources, my gosh, right? No comments from my South African brothers and sisters? Yeah, I guess it's not polite to talk about politics, I know. All right, well, you guys ready to click a button and start going? Maybe a lot of people are having problems getting in, huh? It's only 27 people. No, I didn't send it out today. I feel awkward sending it out when I'm still not on my computer. See my beautiful computer in the picture? It's still not up and running. But honestly, I've been so busy, I haven't touched it since last week. I got some other things going on. So anyways, let's click the button. Let's get going. Well, Daniel, I'm still a maybe for next week. So, yeah. Oops, my recording run out of space. Hang on. Let me fix that. It's been a All right, and that'll work. All right, let's get fired up, guys. So good morning, everybody. Let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let me introduce myself. My name is chicken. Yeah. My name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you for being a client. And if you're not a client, please go to TradersWay.com and open an account. You can do a demo account in less than 1 minute, honestly. Give us a test, but that's why I'm doing these sessions. I want you to succeed and therefore earn your respect and loyalty. And that should translate into you choosing Traders Way as your prime broker for your successful Forex trading business. I'm here at 7:30 in the morning, Monday through Thursday. Non-farm payrolls on Friday. I'll be there at 7:30. Thank you for being on my trading team. All right. Anybody trade euro dollar? Yeah, it's like 30% of the entire Forex market, something like that. 20 or 30% of the 5 trillion a day. Ah. So I imagine some of you guys trade it. I don't often cover it in my webinars because I'm cognizant of many people just sit here, listen, and want me to tell them what to do. So if I do euro dollar, it inevitably turns out to be, Wayne told me to sell it. Wayne told me to buy it. So I try to leave it for you to make decisions, right? So why don't you tell me what you want to do? Are you a bull or a bear on euro dollar? Okay. Daniel and Ryan says there was a nice entry Monday to sell at weekly M3. Yeah. You mean there? Yeah, I guess you're right. Good trade. Yeah, good, Ryan. Very good. Yeah, you know when my voice is rattling around inside your skull, then I've had an impact. Yeah. Please open at M3. Please open at M3. Yeah. It's very difficult to put in a working order and walk away, right? Yeah. There you go. So yeah, so the swing traders have caught this just because this is what we did on Sunday. So it's just moving along. The bears risk a bounce at M2, right? How come? Why do we risk 55.50? 55.55. 105.55. Well, it's a buy zone for bulls. Right? That's all. If we were a bull, that we would have a working order there, right? It's not even defend, it's just that's where they would buy. Yep, this is a tough gig, this forex. I never trade when I'm sober. Yeah. I only trade when it wanes. All right. All right. So anyways, there's a trade. Pretty straightforward. Again, I'm just showing you the dog, I eat my own dog food, so to speak. Yeah. Oh, the psych level 105. Yeah. So it's lovely, right? So for those that are in it, the thought process is here. Okay. And then there's the previous lows here. And then let's do it this way. Horizontal line properties, 105. 105, mate. So I might not quite make it, huh? That's all. I'm telling you, it helps when you have a bias. The longer you wait to develop this bias, the longer you deprive yourself of your destiny. You guys remember this? This is the weekly trade plan. The weekly trade plan, not the trade plan for the week. This is weekly charts. Okay. Okay. There's nothing below this, is there? Yeah, there's nothing below that yellow. Going back to weekly charts, that is the low of 1996, 1995, 1996. Okay. So we get below that, boom, boom, boom. Now, I remember buying euro in the 80s. Is that funny? So this says 2001, 2000. So this is literally when I started trading forex. You know how awesome it was? I got my dad into it as well. So my dad would buy euro, take a shower, have breakfast, sit back at his laptop, take profit, made a couple $100. And then a couple hours later, he'd buy euro, go outside, walk around the block with his dog, sit down at his laptop, take profit, a couple $100 more. That's all we did for the first 4 or 5 years. You bought the euro. It's a hard knock life for us. It's a hard knock life for us. Right? Anyways. Yeah, tough gig. I used to be a currency trader once. Right? I bought the euro at 85. I like the way you trade. Yeah. Tough gig. Okay. So this, I think, goes back to the weekly, to the swing trading seminar that I did Sunday. I think what we're looking at is my analysis of monthlies, the monthly trade plan. Right, that's what these lines are, where price is supposed to go based on monthly analysis. And now we're looking at weekly analysis. So one of them is overlapping the monthly and the weekly. If you were a bull, you would buy at the M2. That's why we have here. Now, why does the M2 set up in this case? Well, it has to do with bears taking profit in the green zone. And why do they do that? Because they're supposed to. So you run out of bears, there's no bears left. So it at least drifts up for a while. It maybe comes back down if the bears re-enter. Or if they never re-enter, then the bulls jump in. Because this first move is just, let me try to zoom in a little bit. This first move up on Friday is not bulls buying. Okay? This move up is bears getting out, profit taking. Right? So check this out. If you thought this was, or if you're at least going to have a trade plan, because remember, sometimes your trade plan isn't necessarily what you thought, what you think is going to happen. You do what could happen, that might happen. You understand the difference? So for example, you could say because of this, on Sunday/Monday, you said your trade plan is to watch it to come down to M2, and if it goes up, you're going to buy it. Why? Because you know if you buy it in this yellow zone, let's say, okay, you can put your stop right here. And your entry is here, let's say, okay, on the 1, 2, 3. Pretty standard, easy stuff, right? London Open 1, 2, 3. Great. So you bought it at 53 bucks, retracement 53. Your stop's here at 52.80. You're risking 25 cents. Long at the weekly M3, $53 a barrel. After the bounce, after last week's profit taking, bounce at the psych level, bounce at the pivot, 1, 2, 3 reversal pattern, psych as your support, pivot as your support, stop close, and if you get this right, this week your target is 55, maybe 56. Maybe you hold it for a couple of weeks and get this up to 57, the monthly target. Let me tell you, that ain't bad for 25 cents worth of risk. And you do it just because it's a setup. Okay? And then, of course, some people would straddle the market and sell it up here, and one of them's going to make money, one's going to lose me. Yeah, well, those are for people that are not smart enough to make decisions. They rely on smoke and mirrors. And by the way, if you're guaranteed to lose on one, that's just cost. You've thrown away a big portion, percentage-wise, of your profits, which means you threw away the money simply because you couldn't make a decision. And in my opinion, you're not worth the money. But that's a whole different story. Interesting, right? Just a little technical analysis. You guys get it? Now, if you're a bear, you could have sold here on Monday, Sunday or Monday. That's fine. Although the market's not quite open at that point, but midnight, I guess, Sunday night, Monday morning. You can drop it, right? Or maybe you try it again. And these are good entries, and they failed. You just didn't make money. So now your next shot is going to sell it at 54, right? If it rolls over at 54, you're going to take a shot. And you might get yourself in a week where you're frustrated because you never quite get in, or you get in, you jam your stop, and then you get knocked out of break even, right? So, and you know, I see when we're looking at this as last week's target, and you go across here, I mean, it looks pretty supportive to me, right? Oops, let's get it right in there, right? I mean, it looks pretty supportive. I mean, it's just one of those things where we're range bound, so I wouldn't, asking it to go way down here this week, 52. I mean, it's plausible, right? So you're going to sell it at 54, going for 52. Okay. But a bull would do the opposite, right? You'd see this as support, buy it down here, respect the M2, 1, 2, 3 reversal. You buy it at 53, stop at 52.80. Now your target's up here. That's a trade. That's truly a trade, right? You're just truly trading it. And if you did the reverse, you thought it'd go to 53.5 down to 52. That's cool too. It's just not working for you. But you probably didn't lose money. And if you did, it'd be nothing, right? And that's how it goes when you're trading. You're like, well, I got to take that shot at the weekly central. I'm a bear, so I have to take the shot. It starts moving in your favor. You move your stop close. Failed. Next day, you're at weekly central pivot point again. Drops back below. Take the shot. Drop a stop. Once again, it's failed. You're like, oh man, come on. And then you're like, oh, maybe at 54. Once again, you wait for it to go to 54. If it rolls over and respects the weekly M3, you take another shot, put your stop close, and then if it fails again, you're just like, oh, dang it. Okay? But that's called trading. Sometimes it works that way. As long as you never put yourself in a situation where there's a bloodbath. Okay? And you know what's even worse? when you sell and buy and sell and sell and buy and buy and sell and sell and buy, and you still can't make money because you're all over the place. Right? And then you say, well, if I would have just held it at 53, I would be making money by now, right? So I'd rather you just make the decision. I don't want you to swing both ways like a broken gate. Okay? Well, Ryan says this has been a good week for patience and discipline. Yeah, maybe. I mean, it depends on what you mean by that. But when I look at things like if you're a bull and you saw the profit taking on Friday, okay, and you bought it on Sunday/Monday here at 53, that was easy. If you happen to be a bull, okay, so remember, it comes down to your bias being congruent with market conditions, not your brain, not how smart you are, not how much you outsmarted everybody. That's a fool's game, by the way. Trying to outsmart everybody is a fool's game. It's a silly thing to even want, okay? Well, your job is to say, I've analyzed this market and I'm bullish. So when the market happens to be bullish, you make money. And when it happens to not be bullish, you stop trading because the market is now not bullish and you're a bull. So you're like, well, I guess it's not bullish now, and you stop trading. It's not right. So if you happen to be bullish here, you bought this. If you didn't buy this and you are a bull, then forget you. You have no idea what's going on. Just totally out in la la land. Crickets. little Tweety birds and stars flying around your head, and you're like, I like to trade oil. I mean, you didn't buy it at the weekly M2. What's wrong with you, boy? Right? So that's it. So if you happen to be a bull, you bought it there. That's what bulls would do or are supposed to do. And now you're making money. Is it your greatness? Is it because you're smarter than everybody? No, you did what you were supposed to do. That is the buy zone. You bought it there. Good job. And the market is paying you. You understand? Because now your bias agrees with current market conditions, and that's how you make money. That's it. That's why you need to be humble about this whole thing. If you try to outsmart and swing both ways and trade up and trade down, and you're all short term like that, it'll never work out for you. So like I say, if you know how to trade a 1 minute chart, this, my God, if you're trading a 1 minute chart and you didn't trade the inverse head and shoulders or the 1, 2, 3 reversal, you see, like, it's easy if you already know you're a bull. It's easy if you already know this is support. It's easy if you're on a 1 minute chart and you see it test the psych level, spike up, 1, 2, 3, spike up, right? 1, 2, 3, spike up, retrace back into the roll reversal long and gone off the psych level. I mean, it's ridiculously easy if you've already done your homework ahead of time and you know you're a bull. You know the prices in which you want to be a bull. You know the lines in the sand. You know you want to buy it at M2. And then you get like reversal patterns on top of reversal patterns on top of reversal patterns on top of reversal patterns at the exact price you want it to reverse, right? Here's a 5 minute chart. And you didn't trade that? Like, it doesn't make sense to me. How could that possibly be possible? I don't know. That sounds really smart, right? Right? The only way it's not possible is if you don't have a trade plan and you don't have a set bias and you have no idea what you're doing. Okay? You wouldn't trade this if you were a bear. You wouldn't trade this if you had no idea what you were doing, lost in space, right? But if you knew what you're doing, you had a plan, you had a bias, you know, and you used your pivots using pivot theory, you used candlesticks using candlestick theory, you use moving averages using moving average theory, you use price action using price action theory. I mean, you used anything. I mean, I don't know Elliott wave, but I'm sure there's an Elliott wave in there something, right? 3-wave correction or something. I mean, if you just used something, anything, there was an entry there for you, right? I don't care what your technique was. Your tactics here is if you had the right strategy, that was like I said a couple of days ago, like punching a small child in the face, then taking their ice cream. I know it's not a great example, but you know, a quick, maybe a quick roundhouse, you know. Little right jab, but you know, it would work, right? So anyways, yeah, quite vivid. So, I mean, that's what it is. It's the plan, it's the bias. You started your week. Do you remember? I think it was Monday. I don't know what day of the week is it. Is it Tuesday now or Wednesday? I never know what's going on. Yeah, I talked to so many people in so many different time zones all day. Yeah. All right, it's Tuesday. So it must have been yesterday then, but I remember saying things like, because you have a bias, you do your analysis. Maybe it was the swing group. I can't remember. But I told somebody recently that you write it down what your bias is and what prices you will consider trading this week or even today. It should always be that way. When you sit down at your charts and you're looking for a trade, you've already lost. What's going on today? What should I do? Where should I get in? Is there an opportunity? No, all of that. Right off the bat, you've already lost. Maybe you don't lose your money today. Maybe you don't lose your money this week. Maybe you don't lose your money this month. It's going to happen. With that kind of attitude, you will lose. Okay? So, the difference is you say, I'm a bull on oil, let's say. Okay, right? Or I'm a bear on euro dollar, or whatever it is. You've made the decision. In fact, think about it today. If you've never done this, and I tell you guys, I've said it hundreds of times, but let's say this is the first time you've heard it. Write down on a piece of paper, grab 3 different pieces of paper. How about that? Pick 3 currency pairs that you like to trade. Or you can pick 3 currencies you like to trade, and that's a little more advanced because now you're going to have multiples of that. But let's say you just say, I like to trade euro dollar, I like to trade oil and gold. Let's say you like the commodities and euro dollar because of the volume involved, right? That's it. Then on each piece of paper, so you write gold, oil, euro dollar, right? Each has its own paper. You write down 3 reasons why you're bullish or bearish. But you say gold, let's say bullish. Oil, let's say bullish, right? And if those prices are going up, you're right. Maybe you're bullish on euro dollar because you think the dollar is going to fall, gold will go, whatever, right? So you're bullish euro dollar. Great, whatever. And then you write down 3 bullet points for each. Why? Then you put it up on your wall. Okay? So you're bullish on the oil, you would catch this. You understand? Because what you would say, because you want to sound professional, don't you? You say, well, I am willing to buy oil this week somewhere between $53 and $53.50. Preferably 53. And you could have done this over the entire weekend. You understand that? Over the entire weekend. You could say, I really want to buy this around $53. If the market really falls fast on Sunday and Monday and Tuesday, if I find this down at 52 and it's like Tuesday, I'll probably buy it at 52 based on bearish profit taking. So you'll probably buy it at 53, and depending on when, if we hit 52, you'll probably do something down there, okay? And you're done. You're in control. You're like, I'm a bull in oil. I can tell you 3 reasons why I think it's going to go up, and I know the prices in which I might want to buy, and all this other nonsense that's happening, you're not interested in. You're fully in control of your trade plan. You're not in control of the market, but you just know the price in which you would consider acting, right? And you do that for all your things. Right? And so if you had said on Sunday, and let's say on Saturday and Sunday, you analyzed all your charts and all that kind of stuff, and you're thinking, M2, 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 I hope I get M2, I hope I get M2. The market opens, you throw down a working order just above M2, right? Maybe you're in that way. Good, done. You're bull. You bought it at M2. Right? No, you're like a Nobel Prize winning rocket surgeon. Great. Now, I worked at NASA for 2 summers, so I am a rocket surgeon. Somebody reminded me of that the other day. I'm like, you don't have to be a rocket surgeon to understand that. And he's like, well, you were a rocket surgeon. Oh yeah, I guess it's true. So Artem says, okay, so all of that, so now you're talking tactics. So Artem says, if you're a bull and you're waiting to buy it M2, do you wait for reversal patterns or you just buy it? The answer is yes. Or no. I mean, at that point, to me, it doesn't matter what your technique is. If you happen to be watching your charts at that very moment, like some people would notice, what do you call these guys? Railroad tracks. And you're like, oh my God, railroad tracks. And then you buy the 50% retracement. right? Or you wait for the big move up and big move down, and then 1, 2, 3 it. Or you're not using a 15-minute, you're using a 5-minute, right? Or you do something like when the market opens, you say, okay, well, if it comes down here, I want to put a working order just above the weekly M2. And then very often your stop is down here. Let's do it this way, since that was the original stop. Your stop is below the S, below the support. So you're like, okay, so your stop is there. And then in the morning when you wake up and price is over here, you move this closer, okay? And then hope this sticks, okay? And then you could even do this now, okay? Every time it makes a higher low, you move the stop. So now let's say it heads up. Let me use a drawing tool instead. Okay, so let's say now the price action is it's going to break, come back down here off the roll reversal, right? Okay, that's what we're thinking. Because of that, you head up. Okay, if that's the case in the near future, then you move this stop here. Okay, and you keep moving the stop from down here on the original entry down here to reduce the risk, right? Then you probably moved it here, right? Then finally a break here, so now you've moved it up a little higher to that higher low. And then if it breaks out and pulls back and takes off, once again, you do that. Of course, you could already have moved it here. I mean, that's your judgment call, right? So yeah, whether you use working orders or reversal patterns or moving average crossovers, like there's the 2155, right? Or here, it's the same price if you use the 2155 cross or if you used a 1, 2, 3 on a 15-minute, inverse head and shoulders on a 5-minute, railroads on a 5-minute, that gets you in a little lower. Okay, I mean, there's so many ways to skin this rabbit. But the thing is, you're eating rabbit, right? How to not freak out on the first pullback? The best way to do it is not watch it. Okay. That's that. It's just a trade plan. Right? Or of course, the other way, Artem, is let's say you drop your lot size really small for an entire year. Okay? To the point where, you know, there's nothing to sweat bullets of. You know, if your trade plan goes bad, you lose $50. You're like, wow, all right, you can live with that, right? And you just do the trading. Just trade like you're supposed to trade. Throw down the money, drop your stop, take a walk. Sometimes these things take 3 days to come together, right? Where it just sits in that zone, right? So let's say it just does this for the next 3 days. Right? I've been in trades like that for 3 weeks. And eventually your bias wins and you make money. And you're like, I knew it, because you bought here. And the most important thing is you bought where you were supposed to, right? And then, of course, okay, of course, what happens here? Let's say, let's say that happens this week. This long trade was a good trade. I mean, you can see that you probably have already moved your stop, and so you've lost nothing or you made a little bit of money. But it could totally happen. This could totally double up here. And for some reason, there's no way the market wants to go above 54 this week. And it collapses on us. And it goes down to the next level. And that's okay. In fact, there's a high probability that'll happen. Because if someone sells it at 54, all we've done, right? All we've done is confirm that the bears are still in the market. That's what a bear would do. Okay? These guys, remember, this is the monthly trade plan, right? So what's actually happening on the smaller time frames? Okay, so follow this line, right? That's their monthly trade. They're already taking this down to 51. You don't see 51 really on the screen here because it's not likely to happen this week. So what's actually happened price action wise? Let's do this in blue now. Then what's happening on a different time frame is this. These guys sold, then they took profit, and then they sell again. Okay? That's why you don't want to swing both ways like a broken gate, guys, where you're like, oh, well, I guess it has to go up, and oh, I guess it's going up. No, what you want to do is say, this is what you think is happening on the higher time frame. Right? Artem, you should be saying, you know, what do I do at 54? I don't know. So you either wait for it to get to 54 and look for reversal patterns, right? Or you just drop a lot, but that's more difficult, especially on a Tuesday or a Wednesday, right? But think of it this way, guys. Let's say you're convinced that the market is bearish, that we're just not going above 55. We're much more likely to get down to 51 before we get to 59, okay? Okay? So, you've said it. You are a bear, okay? Absolutely, you're a bear now. This is what you believe is happening. You have a monthly trade plan. You might be short for not just a week, a couple of weeks, okay? Because of the monthly pivots and stuff, right? Cool. So what are you doing now? Well, your sell zone is, I mean, very often I draw it as a zone, but let's do it this way. Let's say, hang on. Let's say it's really two different things, okay? Here and here, okay? So let's say this breaks out today. I guess we got to do a 5-minute chart. Okay, let's say we break above this today, okay? And it goes up to 54. And you're already a bear. Now, you don't see anything bearish on this chart. But remember how amateurs lose money. They look at small time frames and they make decisions. Right? It's like driving with a scuba mask on. Like, what the hell are you doing? And again, I'm driving my Ferrari. The top's down, it's windy. So I'm wearing my scuba mask to keep the wind out of my eyes. Like, how do you see that damn thing? Well, I don't see very well. I don't see anything to the left. I don't see anything to the right. I'm just kind of really, as long as I'm going straight, it's all good. Yeah. Right? So, you're right. So, in this case, there's nothing bearish. But if you've done your homework and you've done your analysis and you've made your bias, you believe it's more bullish or more bearish than bullish. So now you're simply waiting on a 5-minute chart, let's say. Let me zoom in a little more. Okay. Let me open this up. All right, good. So what you're doing is you're waiting for it to get to 54, and then what do you want to do? Well, since it's been going up and not down, like, right, I wouldn't just throw a trade down, although I could, of course, and just say 25 cents above 54, you're going to have a stop. And you just throw down a working order. Totally could do that. I don't like doing that if I'm awake. If I'm not awake, yes, sometimes I'll do that. Okay? But what if on this 5-minute chart you see it hit 54 and then immediately turn red? You know you're not alone. So maybe now your next trade plan is wait for the retracement and drop it. So let's say it does this, moves really quickly on the New York Open, and then immediately turns red for some amount of time, and then does this. This time it stays, let's say, it only goes to 97, let's say. Okay? And then turns south. What do? So you're short at, I guess it'd even be less than that if it was 97. So you're short at 97 plus some, spread and all that kind of stuff. So in the 90s, you're short at 53.90 something. Okay? And now your target is 52.10. Okay? It's fairly close because anything above that is not interesting to you. You're not interested. So when someone says, well, what if I drop the price by $500? I'm still not interested. I don't want to buy your car. It sucks. Well, what if I come down 700? I'm still not interested. Your car sucks. I don't want to drive it. I don't want to drive a Porsche California. It's embarrassing. I don't care what the price is. Take your Cali and shove it. Rather spend $100,000 on a Corvette. And I don't like Corvettes. Why would I want an Italian Corvette for $200,000? One that's guaranteed to break. All right. So, anyways, that's called a trade plan, or Tim, right? Here's the thing, guys. It looks bullish on this time frame. Today it looks bullish. That's great. Very nice. If you're a bear, you know what you want to do, you know the price you want to do it, and then you start using things like your moving average crossovers, your candlestick patterns, your price action, your Elliott wave, you look for, what do they call it? 3 pregnant nuns, Japanese candlestick pattern, and then boom, off you go. Whatever you need to get short, you get short. And the funny thing is, if you're sitting there thinking like, you're looking for a particular candlestick pattern, a reversal one, 3 pregnant nuns, right? And you're like, there's going to be 3 pregnant nuns. There's going to be 3 pregnant nuns. And all of a sudden you see 3 pregnant nuns. Pull the trigger, dude. Pull the trigger. What if you see a 5A cross? Pull the trigger. What if you see a 2150 cross, 55 cross? Pull the trigger. What if you see railroad candles? Pull the trigger. What if you see shooting stars and pull the trigger? Just pull the freaking trigger. Right? But wait for something to confirm you're right. But where you make your money isn't these little candlestick patterns and all these different things that you're sold. All this nonsense that are put in books and DVDs and all that crap. You've made the decision there, and even though it looks bullish in the short run, it's not going to stay that way. You've made a decision based on bias. You know the exact price you're looking for reversal patterns, and then you get a reversal pattern, pull the trigger. Get short, drop a stop. Now you're short at 54, right? And where's your stop? 54. You're risking 25 cents on a $2 move. On a $2 move, maybe 3. Seems good to me. You get it? And let all the fools chase the price. And if you're wrong, you lose 25 cents. I used to be an oil trader. It was a tough gig. Okay? Okay? So yeah, what you're trying to do this week is get your monthly trade plan in line with the market conditions for the week. Can you see if you're targeting down here at 51, that this like three wave correction simply gets you back up into here, and now you're going to sell. Okay? Now I don't. That looks like almost a 786. I guess it depends on where you draw the beginning of this move. I guess you could do it here, and yeah, you're looking at exactly a 618. Okay. Oh damn! There it is. Damn! We just hit the 50% of the move. So anyway, so now you got a confluence of that. Looking at the longer term charts, the weekly M3 at 5400 is also a 618 Fibonacci retracement of the macro move. So you're going to look to get short around this 54 area. It's target of 51. I mean, it's 51. It's below here because it's your monthly analysis. So in our swing trading class, when we did our monthly analysis, we already pointed that out, where if you're a bear, you think oil's going to work its way down to 51. If you're a bull, it's going to work its way to 56. So you just have to do what you need to do to ride that out. And all you have to do is know if you're a bull or a bear. And if you're a bull, look, we already have you set going that way. And if you're a bear, you're waiting. You might have taken a shot here and only made a little bit of money. You might have taken a little shot here, maybe made some money, but more likely broke even. Didn't get another entry. Now you're waiting for 54, the 618 Fibonacci retracement. You're going to try again there. But the thing is, you're in absolute total control of your behavior, even though you have no control over the market. And that's the difference between an amateur and a professional. Somebody says, what do you think about oil? I'm waiting to get short at 54. Doesn't that sound professional? Versus, well, I don't know, it depends. Every time I open up my chart, it's a random walk. I have no idea. Sometimes I'm bullish, sometimes I'm bearish. I don't know what's going on, in fact. Sometimes it's bullish all night, and then I buy it and it falls. Yeah, because you bought it where at a bearish setup, right? You can't do this without making decisions. It was up all night, and then I bought it. Yeah, it sounds like you bought it high, dude. You bought it right where a bear would sell it. You monkey head, right? You got to call yourself names if you're going to be humble. I'm a monkey head sometimes. Like I said in my book, I said when I first started trading Forex, I sucked. I was the absolute worst. And if I tried to use my gut, I was even worse than that. I had no gut feeling whatsoever. I just flat out sucked. But I worked really, really hard, right? And did lots and lots of analysis. And over time, I started to suck less and less. I didn't even talk about getting good. I just talked about sucking less than I used to suck. It's kind of like Jumbo. Jumbo, may you suck less than you normally suck. Well, thank you for that compliment. Huh. What do you think about that move? Right? That's tradable, isn't it? Well, you say sideways. I see, okay, I wanted it to go up, and it went up. And then I said if it hit the target, it could retrace back to the central. It didn't hit it Wednesday, it hit it Thursday and Friday. Gave us the counter trend that I taught the swing traders. Counter trend says it comes back to the weekly. I look at the roll reversal, I look at the weekly, it looks pretty dang close. Or what they say, close enough. I don't know, but somebody bought it off the roll reversal. This was enough here, right? So there's only two scenarios here. Now, I wish it came down a little more, but maybe this isn't a perfect setup this week. But somebody's buying it, okay? Or the counter trenders took their profit early, fine, because they don't feel comfortable being short this pair, fine. But I can tell you, someone might be buying it now, and it was very, very predictable at exactly the areas you'd want, right? Like, make sure you understand what's going on there, right? So you need to be buying this up, or the opposite's true, and this is going to come up and then down. Okay? Okay? So if you're a bear, you're getting ready. You want to sell it at 14, 1430, 1450. Okay. A little trip up to 1450 and roll it over. Okay. But if you're a bull, you need to be looking for reasons to get involved. Can you be too careful? Yes, you can. Right? You can't make money. It's like this. It goes back to hockey, right? A hockey coach, or I suppose a soccer coach would be the same. You can't score unless you take a shot. So like in hockey, what happens is a player passes to a player, who passes to a player, who passes to a player, who passes black to a player, who passes to another player, passes it back to another player, passes it back, and then all of a sudden, someone intercepts a pass and the other team takes it the other way. I'm like, dude, there was like 9 touches of the puck and no one took a shot? Like, take the shot. Take the shot. Oh, I didn't feel good about it, coach. Take the shot. Well, look, if it's not, right? I mean, if it's not a good setup, then it's not a good setup. What are you going to do about it? So if you skip this because you wanted to come down to 1350-ish, okay, fine. That's fine. Now it came down to 1360. I mean, it came within 10 pips, maybe even less, 8 pips of your entry, but you pick your prices and you wait for your setups. But if they're not good, you don't have to take them, right? So this is a great example of that. It's not a good setup. But if you are bullish, there's something here. Okay? There's something going on here. Okay? Double bottom, right? Big test here. At the very least, we want to test 15, don't we? Right? Follow the 4-hour oscillator, maybe? At least up to 15, 1520, right? And if you're a bear, you're looking at your 1432 to 1500, 1520 kind of area. I mean, right? You want to sell it up here if you're a bear, right? So this whole area is your bearish setup. Okay? And if you're a bull, you should really already be in. I mean, let's go back to a smaller time frame. right? You could have bought it at almost your entry. You wanted it at 1350. Okay, 1344, but I'd look at 1350 midpoint side. And it only went down to 1358 or something, right? And then what? And then 1360, 1390, 1380, 1390, right? 1370, 1380, right? And now we're at 1410, 1413. I mean, just even in the last couple of minutes, you've just thrown away 25 pips, right? So you're like, if you were bullish and you saw, I mean, I don't know, you could. I mean, yes, it's not great, but somewhere in here, you say to yourself, it's looking awfully bullish, off a real support zone, off, near my pivot, but you're trying to buy it at around 1350, and now we're above 14. I mean, right? We're talking 50, 60 pip move here with some upside potential still. Okay? So somewhere you got to get on the glue train, right? And then if you're a bear, you're salivating. You're like, oh my God, this just spiked up to 13, and your short zone is at 32. It's time to get ready, son. Put on your boots, boy. Okay. You see the entry? 79.50. What's supposed to happen at 79.50? Correct, profit taking. Whoever sold it here did their job. They've been in it too long now. They're nervous because it was supposed to rally up and they were supposed to sell again in this white zone, but instead it just went down, down, and down, and down. They're going to take their profit. This is the counter trend trade. Very often by the end of this week, right, the pattern says very often by the end of this week, we will at least touch the weekly central. Sometimes it goes higher, okay, but the idea is if this is like a Tuesday, we're at 79.50, you're supposed to buy it back with a target of 80.50. It's just, that's it. I've taught that for years. Now, on a 5-minute chart, if you were watching this for the counter trend trade, would a double bottom 1, 2, 3 make you interested? Right? Ryan took it, huh? How close to 79.50 did you get? Whoa, what? You bought it at weekly S1. Ew, I don't like that. Oh, it's a monthly M1? Oh, no, yeah, no, I don't like that. Yeah. Yeah, I don't remember anything about counter trending in S1. I don't know anything about that. Yeah. All right. So you're getting back to break even then, huh? All right. Yeah, be careful because that's dangerous. Don't do things only because it's a confluence of pivots, right? set up, and like, for example, let's state it this way. Here's your S1, and then you say there's a monthly pivot in there about the same. So let me mark that up with a different color. Okay, and you see a confluence, and you're like, oh, the monthly M1 has to hold because it's also a weekly S1. Well, the monthly people don't even see this on their charts. Because if they're looking at daily charts and weekly charts, what it looks like to them is a wick on a candle. Right? And that wick may be a whole day or 4 hours or 8 hours or 12 hours of price action, right? And you don't pay attention to all these wicks. You don't really say, well, I wonder what happened during that 4 hours that wick created, right? So they don't even perceive it. It's the 800-pound gorilla carrying bananas, right? They don't even notice you. Right? You ask the gorilla, you're like, what are you doing about all these monkeys stealing your bananas? And the gorilla says, what monkeys? Right? So they don't even see it. So what you want to say is, if you got the weekly support in here, that's fine. And you're thinking, well, it's got the monthly M1, so it has to bounce here. Well, they won't even notice if price comes down, does the weekly pattern, and then takes back off. So don't jump ahead of the weekly pattern if you can, okay? Because the weekly pattern should still fulfill itself and not take out any of these guys, right? These monthly traders, they have their stops and stuff in place, right? They've made their decision, right? And it's not going to be this close. Okay? So what you're looking at is you're just going to skim the surface here. You're going to just dip below because all these bears need to hit their profit target. As soon as they do, it's going to pop back up and fulfill what these guys thought was going to happen in the first place. And if these are buyers and then these are bears getting out, suddenly it becomes a bullish market because there's only buyers left. Okay, so let the weekly pattern do its thing, let it drift down, bounce off the atmosphere here, and slingshot back into the bullish market. Okay? Okay, so it's not just these prices. Think of it as patterns. Like the guys that shorted up here and they want to hit the green zone. That's what they want to do. They're not going to get out until they hit the green zone. Their stops are way up somewhere, right? I mean, their stops, I'm thinking even re-entries are here. So their stops are way up there. They've been short for weeks, right? So they're hell-bent on getting to this point. And when they get to that point, that's when they take profit. Because that's what they said a week ago or 2 weeks ago, right? And once they get out, these guys were already buying in for just different reasons, but it's kind of the same. Like nobody, these monthly traders, they don't see the difference between 79.70 and 79.50. It's only 20, 25 pips. They have 300 pip stops. So let the weekly guys do what the weekly guys want to do, and then it'll take off because we know the market's bullish. Okay? And that's the birth of the counter trend trade. Okay? And by the way, very often you notice you can get some pretty big moves off profit taking. I don't see any examples really to show you. Okay, but very often, if it was going to head up the rest of the year, it would be a scenario like that where there are bulls buying and bears getting out. Okay, so to a bull, to a big bull, they're just buying it somewhere around 80. So you picked it up at 79.50. Who cares? To a bull, to a macro bull that wants to be in this for the rest of the year, what does he care about 50 pips? Right? It might be your whole day. He doesn't even see it. He's got he's got a 300 pip stop. He's like, yeah, if this goes all the way down to 77, forget it. But he's going to be in it, and his target is way up here. He's going to be in it to the mid-90s, right? And it's Kiwi. He's going to earn interest every day. There may actually not be a profit target. He'll scale out at 93 and take the rest out at 97, but there just may never even be a target. Why get out of something that is paying you such a high yield? You're earning 200% a year in interest payments. He may be in this forever, right? Look at this 2016 deal, the 618. Right? So where are we now? Okay. So just put it in context and let it happen. Right? Don't force it. Just remember there's different groups, I guess is what I'm saying. There's different groups of traders, and you need to break it out and think about what all the traders are doing. Right? The weekly traders, the big institutional investors that are in it, literally 300 pip stops, 1,000 pip limits, okay? And try to clue them in and say, well, that weekly pivot, the pivot profit zone is only 30 pips below the monthly entry. It's going to come down, fulfill the weekly. Just because those traders, that's their target, they need it. And when they get out, that's what's going to create the macro reversal. And off it goes in the longer term trend and so on and so forth. And just let it happen and realize there's that wiggle room between strategies. Okay? So with that, peace on earth. May the pips be with you. May your profits be above average. Look at the Mexican peso still getting strong. Lufle tulimum. Just gorgeous stuff, huh? Look at the weekly M2, ladies and germs. Right? Doesn't it feel good on the whole? Look at that. Just gorgeous. Hey, swing traders? Salivating. Look at that. Dropped right down to the M2 and stopped. Within a half a pip. Oh my God, it's so awesome being a currency trader. It's awesome. So anyways, peace on earth. May the pips be with you. May your profits be above average. And I will see you tomorrow. Thank you for being a client of Trader's Way. We appreciate you. Yeah, Charles, email me, Wayne at FX Bootcamp. I can't confirm that I have that much of a memory where I shut out of this webinar and then actually do that for you. Just, you got to email me, bro. Yeah. No, you'd be surprised how weird my life is. Yeah. So anyways, peace on earth. May the pips be with you. May your profits be above average. Got to jump, baby. It's been real.